Hey folks, David Frost, My Strategic Forecast. This is another episode of Common Sense Market Analysis. Today is Wednesday, June 17, 2015. You're looking at a 60-minute chart of the E-mini contract. And let's talk about what happened today, because we had, the all-important Fed meeting and the market whipped around just like it always does. And let's just take a look and zoom in to some of the numbers that were important. So this is yesterday, right? This is the 16th, and here is the low from today, which is the 17th. And what you had here was a low of 2078.75 against 2079, which was the number that we had put in here yesterday. So that worked out pretty well. And I just want to make mention that, some of you I know are in the E-mini trader service, and you're getting these numbers in the morning, and obviously they're working out. But I just wanted to make mention to the folks that don't know about it or aren't involved but would like to be, come over to the site, check it out, and if you want to check it out for a couple of weeks, I'll put you on the list and I'll give you the updates every morning. What they get is the support and resistance levels, and then any intraday indications that I may have on where the market may be moving to, though we haven't had that many of recent, but nevertheless, the support and resistance levels each and every day work out pretty spectacular. So let me show you this one, which you just saw, and then look at this one here. The daily chart support level we had was 2095, and that obviously worked out well. But the intraday folks knew that 2098 was going to be the high, and it was 2098.75. And that was a pretty spot-on level as well. So those are working out well. So I'm happy with the levels, the way they're working out. You can see how the 2090 worked out in terms of support before we collapsed down through it. And then this big green up candle was around the Fed announcement, and that's pretty obvious of what happened. And even if you want to zoom in farther and look at the 10-minute chart, look what happened. We go down to 2079, we zoom back up, market pulls back a little bit, and then we move higher, and then we sold off towards the close and then beyond. So those levels are working out great. And what do we have from this point forward? Well, what we had was, I told you that we had a small daily turn that was due, it was really yesterday, today, and that obviously worked out. But we'll see how much more upside. We're going to have a lot of resistance at, well, let's zoom in now, or let's zoom out and talk about where we go from here. I know this looks sloppy. There's a lot of lines on the chart, but they help me identify where the support and resistance levels are. So I like to keep them in here. And then you guys can write them down or put it on your own charts. So what we have is we finished right at the 2090 level, or that's where we are now. And on the upside, we're going to find a lot of resistance again at 2095, and then 2100, and then 2107 after that. We're going to have to see how the next day or so trades out, because really what we have now is the remainder of the week, we have options expiration. So you should be anticipating the market to be whipped around a little bit. So it's very difficult to say we should go here or should go there, because during options expiration, the institutions are going to take the market in one direction or another. And we'll really best be cautious for the next couple of days. And then the smoke will clear as we get into next week. But I don't see any heavy downside, but of course you have the wild card in Greece that could scare the markets, and you have options expiration. So we're going to use 2084 as a pretty good pivot, and then above that level, and then certainly above 2090, the market is bullish. And below that level of 2084, the market becomes somewhat bearish again. And that's really the best we can do for the next day or so. We're better playing stocks that are into good support levels, and because those can trade certainly independent of the overall market. But that's where we are, and that's where we were today, whipped around by the Federal Reserve phony announcement and press conference, and that's just the way it works. Let's look at something else. So the IWM. Now the IWM told a different story today. Now we haven't looked at this in a little while, at least in these videos, but the IWM was relatively weak today in comparison to the S&P. So what do we want to make of that? Well, you know, it's really tough. Let me go back to the daily chart for a second. It's really tough to make too much out of it. Why? Because it really came into a double top. And when you come into a double top, you have to expect the market to repel the double top at least for a period of time. Okay, so am I reading too much into the fact that the IWM was weak into the end of the day or today for the most part? Not really, because we're into the double top, so we're above the moving averages. We're in an upsloping scenario here. I mean, look at this trend line. If you just take this rough draft of this trend line here, I mean, this is bullish. I mean, you can say that if you broke below this trend line, and I didn't put this in exact, but I'm just going to want to give you a little pictorial. If you came below this trend line, then you'd probably break lower. But as long as you're above that, I don't think there's anything to worry about here. The VIX was weaker today. We don't talk about this all too often. But the fact that the VIX was weaker tells you that the fear was getting sucked somewhat out of the market. So I would say that the signs are pointing to more bullish behavior. But with options expiration, it's really the wild card. It's almost like a mini monthly black swan. And that's the way we have to treat it for the next couple of days. All right, let's move on. Let's go over to the gold market. And this is the August contract. And what we had today, I'm going to go to the intraday because it was a wild ride as a result of the Fed announcement. But what happened? Okay, so here's the Fed announcement. Okay, this is 2:10 in the afternoon. And, 2 o'clock is when the Fed announcement happened. And then gold started gyrating. We went lower, and we came right just about into the 1174. So you can see the importance of that number. Then we reversed. And then it started to turn around and pick a direction, and the direction was up. And we got above the 1185, but we couldn't hold it. And we're just teetering below that now. And be interesting to see what happens tomorrow. We've really got to close above 1185 for us to get the upward momentum we're looking for. But you can see how these numbers are playing. They're playing out. The 1174 is important, and the 1185 is important because you can see what's going on here. We gyrated around it here and then fell below it. And we'll have to see if we can recapture it. But all in all, folks, this is a bullish pattern. So if you stay above 1183.20, then the market is susceptible to move higher. So we'll have to see what happens, and you can see how we came back. We came down and tested that and moved back up. But that's where we are today, folks, in the gold market. So 1185 is your new line in the sand for bullish and bearish behavior. 1174 is your don't be long below that number. Okay, let's go to the oil market. Oil had a wild ride today, and I actually got a message from one of the members today, and thank you very much. I appreciate those, that he made some money, and as a result of this number, and you can see what happened here. The market, we woke up this morning and the market was up higher. We traded up above 61. If you're long the market, you have to have a trailing stop in, and then you would have got stopped out down here. And then we collapsed lower and then tried to recapture it. And we're trading okay, but you can see how the 59.75 held true, right? We went through 59.75, and where did we go? Watch this, folks. This is fascinating. These numbers are just fascinating how this works out. Oh, I think, it was on the daily. You'll see it on the daily chart. Look at this. The 58.70 and the low today, I hate that. The 58.70 and the low today was 58.85. Didn't quite touch it, but certainly challenged it, and then rebounded back above the 59.75. So you can see, and oh, by the way, the high was almost 61.75. The high was, no, it wasn't 61.38. Pardon me. It just looked like it on this chart. But let's go to the hourly one more time, and you can see what happened. So we collapse down, we move back up, and these numbers, you can see how they're important. It's 59.75 is the current important number, and if we stay above that, we have a chance to move higher, and if we get back below that, we're probably moving lower. So that these numbers give you a position to trade against. You know where you're right, you know where you're wrong. By now, if you've been watching this for any time, I know the new members are just getting used to these numbers, but the members that have been around for a while, you know that these numbers are pretty spot on, and you can trade against these numbers. And if you've been watching it for any period of time, you know what you can trade against. So that's the oil market, the bond market. Let's bring up the TLT and see what happened. Remember, I said that if you weren't long the TLT, you were going to be able to get a crack at the retracement. Okay, let's see where the retracement took us today. Okay, well, let me get the let me get the low in here. Okay, well, it's not spot on, but it's close. It's fine. You'll get the point. Okay, you came into the 50% retracement, and I said you were going to be able to buy this around 117, maybe a little bit lower, 116.75. Anywhere in this area was another buy point. Let's take these out, and the low today was 117.25. You basically came into the 50% retracement and bounced off of it. Also, the 50-period moving average. So if you look at the 10-minute chart, and this was also susceptible to these whipsaws around the Fed announcement, and that's exactly what happened. This is the same time frame. Right after 2 o'clock, we go down, we whip back up, and now the market is in a more bullish position because we recaptured the moving averages. And if we zoom out to the daily one more time, waiting for the chart to come up. Here we go. You can see that, you don't have to trade against this any longer. You can actually trade against today's low again and belong the market against today's low, and that tightens up your stop a little bit. And yeah, you could certainly get whipped out on a trade like that, but this is a risk business, and that's a pretty good risk reward because I don't think it's out of the realm of possibility to get back up to 120 in this market. That's certainly possible. We'll have to see what happens over the next couple of days, but there's a trade for you. TLT, bond market, acting pretty well. We had this one, we had the low, we had the retrace, and now we'll see what happens from here. The dollar, lower, right into the 94.50 area that we had cited from before. I still think this market comes down. If you've been here for any period of time, you know I didn't believe this was going to be the low. I didn't believe that this was going to be the beginning of the next leg higher. And here we come back down again. I do think the market comes lower, and we have our number, and we know where we're going to buy this market with 3 hands. There's really no trade here right now. I guess if you believed, like I do, the market was going lower, you could be short the dollar, but I'm not interested in shorting the dollar right here, although this was a bearish pattern. It's just, I'd rather be long the dollar here than short here. And here's the reason why. Down here, the probabilities are very, very high that this is going to be very, very good support and that we're going to get a very, very good bounce and rally off that level. Up here, we're more in a middle portion of a range, and the probabilities aren't the same that we're going to go lower that they are down here that we're going to go higher, if that makes sense. I don't want to confuse anybody. I'm not suggesting that it's a guarantee we get here. I'm suggesting that if we did get here, I'm buying the market with 3 or 4 hands. Over here, I think the market's going lower, but there's certainly going to be very good support along the way. You're going to have very good support at this double bottom here. You're going to have very good support at this number at 92.88, which is a mathematical number. Just so happens it's right around the 200 period moving average now. So you can see that I think you're going to get bounces along the way, and it could take a while to get down here. And that's just all I'm saying. Okay, so we took a look at the S&P, we looked at the gold market, we looked at the oil market, we looked at the bond market, we looked at the dollar, and let's look at, I want to look at soda again, because it's again powering higher, up another over 3% today, or 74 cents, and it's getting stretched even though it's not at my target. So I'm beginning to tighten the stop, and I'll tell you right now that my stop is right here at 23.20. That's my stop today, and it's going to continue to move higher as this market moves higher. So I just wanted to give everybody that's long this stock a heads up that I'm never going to let this, I'm never going to let the bulk of the profit in this go against me. That's just the way it works. When you're in the money in these type of trades, you have to protect your profits. This one took a while, but it's paying off, and I don't want to let the payoff go south. So I just thought I'd make mention of that one. Let's wrap it there tonight. I'm David Frost, my strategic forecast, another episode of Common Sense Market Analysis.